Welcome to the Asset Talk. Today, we are delighted to have with us Wendy Cheong, Regional Head of Asia Pacific at Moody's Ratings. Wendy is responsible for operations, strategy, support functions, and regulatory relations. Also with us today is Ramnath Krishnan, Managing Director and Group CEO of ICRA Group. Ram drives ICRA's business strategy, strengthening the capabilities at the firm. Welcome both.
Thank you.
Oh, my pleasure.
Wendy and Ram, maybe a quick introduction on Moody's Ratings and ICRA, maybe starting off with Wendy and then Ram.
Daniel, lovely to be with you and your team at the Asset, and very happy to do an introduction of Moody's. Moody's Corporation is a global integrated risk assessment firm that empowers organizations to make better decisions. We're guided by our mission to be the leading source of insights on exponential risk, and we deliver value to markets through four key pillars, and that's ratings, research and insights, data and information, and decision solutions. For over 115 years, Moody's credit ratings have been central to that purpose. Today, Moody's Ratings rates over 33,000 entities and structured deals. We cover US $76 trillion in debt. And in APAC alone, we rate more than 10,000 entities and structured deals, totaling around $12 trillion in debt outstanding. And Daniel, just allow me a bit more time to just talk about why this is so meaningful for us. 2025, exceptionally meaningful year for us in Moody's, because it marks 40 years since we established our first office in Tokyo in 1985. So that's 40 years establishment in APAC. And today, we operate from 11 offices across the region. Also exceptionally meaningful for us to have the privilege of partnering with 5 of the region's most highly regarded domestic credit rating agencies. We've got obviously ICRA in India, CCXI in China, KIS in Korea, MARC in Malaysia, and VIS Ratings in Vietnam. And together, Moody's Ratings and our affiliates play a pivotal role in supporting the development of the region's debt capital markets. And on that note, I'm going to hand it over to Mr. Ramnath Krishnan, Managing Director and Group CEO of ICRA Limited, which is a majority-owned affiliate of Moody's.
Just to give a brief introduction to ICRA, ICRA has been in business for about 3.5 decades. The flagship entity, ICRA Limited of the group, that's engaged in credit ratings and related, research. This entity is listed and is majority-owned, as Wendy said, by Moody's. We recently also established a company to get engaged in ESG ratings. This is very, very recent. We started this just last year, that is 2024. This is a 100% owned subsidiary of ICRA Limited, though this business is still in its infancy. The other main entities in the group are ICRA Analytics, which is again 100% owned by ICRA Limited, and D2K Technologies. This is a company that we acquired about 1.5 years ago, where we own 60%. So in these entities, ICRA Analytics and D2K Technology, essentially they deliver risk analytics, products, and services. The current revenue mix between the ratings and the non-ratings businesses is about 60-40, 60 ratings and 40 non-ratings. We have a total workforce of about 1,400 people in the group, with a third, being women. Our vision is to be a preferred partner in providing best-in-class and independent risk and investment analytics solutions. So that's a brief introduction for you.
Excellent. Wendy, of course, Moody's and ICRA have had a long-standing partnership that dates back to 1998. Could you talk about the strategic value of this partnership to Moody's and what it means for market participants?
Yeah, happy to do so. Thank you. So that's 27 years of partnership. Doesn't feel quite that long. I think that's really because Moody's and ICRA have had a dynamic partnership that has evolved over the years, and Ram spoke a little bit about that. We and Moody's started with a minority stake in 1998 before acquiring a majority interest in 2014. And at its core, this partnership reflects really two strategic priorities for Moody's. The first is in supporting issuers across both the domestic and the international markets. Particularly for us in this region, we recognize that issuers have the flexibility to raise funds in both the cross-border and domestic capital markets. So our investment in ICRA really helps us ensure that we can meet issuers' needs, regardless of where they should choose to raise funds. Secondly, our partnership underscores our imperative to champion the development of domestic capital markets, which we acknowledge as being critical engines of economic growth. Again, especially in our part of the world, right? So Moody's is fully committed to supporting the long-term and sustainable development of these domestic markets. And if I can just turn our attention, since we have got we've got RAM, our India domestic affiliate here, maybe just focusing on India, right? If you look at just the corporate bond market of India, it's grown at about an average annual rate of 14%. And you compare that statistic as of end of 2024, outstanding corporate bonds only represents about 16% of India's GDP. And you compare that to similar markets, similar developing markets, I should say, 53% in Malaysia, 25% in Thailand, and you can work out that immense growth potential of India's debt capital markets, and so by extension, the rising demand for high quality credit ratings and research, and that is precisely where Moody's and ICRA come in, right? So, we've partnered with ICRA to support its evolution. We do it through sharing best practices, staff secondments, and providing strategic guidance and governance oversight. But the neat thing about this partnership is the fact that it is a win-win. This is win-win both ways, right? So we have regular analytical exchanges between Moody's and ICRA analysts that helps to deepen the credit expertise on both sides. We combine ICRA's local market knowledge with Moody's global perspectives. We truly amplify that market impact, and offer richer, more relevant insights to market participants. I should also say that beyond ratings and research, ICRA Analytics supports Moody's through its knowledge services team. And ICRA Analytics leverages technology and AI-driven automation to provide timely, accurate, and cost-effective data management solutions that's tailored to Moody's needs. Maybe also just referencing the point about the mission statement that I had mentioned at the outset, which is to be the leading source of insights on exponential risk. I should probably give you a real live example of how we're doing that in India. In November last year, ICRA Analytics partnered with BitSight. BitSight is Moody's cyber risk management partner, and ICRA brings BitSight's cutting-edge cybersecurity solutions to Indian companies. This collaboration enables Indian companies to proactively identify and mitigate cyber risks and stay ahead in this increasingly digital world, right? So this is but one example of a collaboration in India, win-win, and I'm confident that it is the first of many more to come.
Yeah, indeed. That's a very important point you raised, Wendy, especially as it relates to the development of the capital markets. And I guess the complementary nature of both Moody's and ICRA, right? Maybe Ram can chime in here, and then Wendy, you can add if you like, is reflecting on that journey, right, of Moody's and ICRA over the past decade, more than a decade, right? How have you seen, in fact, the operating environment in India evolving, and how have your respective agencies adapted your positions in India to this kind of change over time?
We've seen a wave of structural reforms aimed at enhancing the business environment, expanding infrastructure investments, incentivizing, manufacturing investments, if you like, and strengthening the financial sector. The regulatory rigor, of course, that's par for the course, constantly keeps, getting enhanced. But that, I guess, is not too dissimilar to markets, anywhere in the world. So these reforms have certainly laid the foundation for a more resilient, economy. Now, coming to our businesses, ratings business, apart from being regulated, is naturally exposed to economic, cyclicality. Our endeavor here has always been to stay on top of our credits. We rate so that the ratings reflect the health of the underlying credits accurately, and to ensure that the investor and the lending community better informed, in a timely manner. Whilst the non-ratings businesses, whilst they're not regulated, the evolution of products and services in the non-ratings, space are dictated by how the regulatory landscape governing banks and the non-bank lending institutions, evolves. So here our endeavor is to ensure that our offerings are fit for purpose and they meet market expectations, consistently. Now, if I were to just look back at the last, 5 years, we've had, an incredible run, having delivered consistently good results. CAGR of more than 12% in revenues, more than 10% deliver expansion in margins, and having delivered consistently improved, profitability. All this is reflected in the performance of our stock price, though we don't track this very, very closely. That has grown by about 170%. Specifically, if one were to look at the recent financial year, as I had said earlier, that our financial year ends on 31st of March. So if you look at the year ended 31st of March 25, Group ICRA revenues grew by approximately 12%. The ratings business delivered a growth of 14.4% year on year. Our research and analytics business, which is essentially the non-ratings business, recorded an increase of 8.3% year on year. Our profit after tax grew by 13% and stood at 34.4% of the operating revenue overall. Earnings per share was at 177 per share. So this theme of growth, continues. We acquired, as I mentioned earlier, 60% in D2K Technologies, a company that's domiciled in India, to expand our non-ratings business inorganically. We established ICRA ESG ratings business, last year. We've entered into a number of strategic international partnerships with entities such as FactSet, FTSE, Wendy mentioned BitSite, and so on and so forth. And very recently, just about a month and a half, 2 months ago, we entered into a definitive agreement to acquire 100% of a company that's domiciled in India again, called Fintelix, a leading provider of regulatory risk and reporting solutions. So we're hoping to conclude this transaction in the next, month to 45 days. So that's a quick summary of our journey over the last few years for you.
Excellent. Clearly, Ram, not resting, Wendy, not resting on your laurels. Lots of activities going on, right? As we, of course, enter 2025, we've seen some dramatic changes in the operating environment, not just in India, but globally. And we've seen the level of volatility across all asset classes have ratcheted up, notably as we think about 2025. We're talking about tariffs, the elevated geopolitical risks, and so on. When you think about India and the business in India, do you see India staying the course to protect its continued growth? And what are, I guess, Moody's and ICRA's doing to kind of adapt to all these changes that we're seeing today?
See, while we still see India being on the growth trajectory, the geopolitics and the US-led, tariffs, etc., do present some headwinds and a downside risk to our GDP growth. At the present time, we see this impact to be 0.2%, and we have in fact recently pared down our GDP growth forecast to 6% from 6.2% for this fiscal year. Obviously, this is something that is reviewed, periodically by our chief economist, And depending on how some of these things play out, we will revise our forecast, hopefully not down, but hopefully at least it will stay at the same level, where we are at the present time. Now, specifically talking about the US tariffs, naturally there will be some impact, especially in segments that have a significant exposure to the US markets, such as, textiles, auto components, jewelry, and so on and so forth. So from our perspective, naturally, we review our portfolio periodically very, very closely. We look at the possible impact of all these developments on our portfolio while connecting the dots, and then take actions, as may be necessary. But the trick of the trade is to make sure that we are nimble, and then we stay, close to the ground.
And Wendy, now from your perspective, how is Moody's working with ICRA, helping to market participants, especially navigating through these very uncertain times?
Thank you, Daniel. I think whilst it's clear to many, I have to highlight that this is not the first time that Moody's nor ICRA have navigated such a significant market volatility. In fact, even in recent time, the global economy has seen numerous major shocks, including the COVID-19 pandemic, China's real estate slowdown, the war in Europe, and the surging and persistent global inflation situation. And it's precisely, I think, in times like these that the market turns to Moody's and ICRA, and what I guess even more critical in providing clarity and guidance to market participants. I said this to you before, Daniel, and to your team. It is our responsibility really to support the market in these times of needs, right? Three key pillars that I always reference. The first one is analytical rigor, thought leadership, and market engagement. If I can just touch on these three very, very quickly here. Analytical rigor. As a credit rating agency, there is nothing more important than getting our ratings right? So our analysts in Moody's and ICRA are amongst the market's most experienced with deep knowledge and expertise. And when I say experience, I truly mean it, right? In APAC alone, the average tenure of Moody's analysts is around 7 years at the junior and middle levels on average, and at the senior level, 16 years, right? And again, average tenure. Ram, what would the ICRA analysts' tenure be?
In the junior and middle levels, they have vintage of about anything between 8 and 10 years in the firm. And the senior team, for the most part, would have spent at least 15 years at ICRA.
So while Moody's focuses on the cross-border markets and ICRA on the domestic market, our analytical teams collaborate closely to assess evolving trends. And this engagement really enables us to examine the credit landscape from multiple perspectives. And I think very importantly, allows us to utilize a much wider array of data points so that we can enhance our analysis. The point here is that we have this unique ability to cut through the market noise and isolate the true credit impact. Very happy to report that last year, rating accuracy for us, in spite of market volatility across all of APAC, have remained well above historical average. Rating volatility was limited. Rating actions were taken in a timely and measured manner. Ram, not sure if you've got any more statistics to share from ICRA's side.
As I mentioned earlier, we must, obviously from our point of view, we make sure that we constantly endeavor to connect the dots and review the impact on our rated portfolio. We have a pretty, institutionalized, process for it. And our role is to ensure that the actions that are taken by us are real time, and we ensure that accurate rating updates are provided, to the investor and lending community in a timely manner.
I mentioned the first pillar. Now, the second pillar is around thought leadership, right? And this is in addition to rating accuracy. I think the market, one of the key reasons why the market values Moody's and ICRA is because of our timely, independent, and insightful research. Just last year alone, Moody's Ratings published over 14,000 reports globally, including 2,000 that are focused only on Asia Pacific. And collectively, it garnered over 50,000 views. Just on India alone, our research puts the spotlight on a number of key themes that both global and domestic investors are very much interested in, and the crucial role of infrastructure, for example, developments around energy transition, and really providing these research and importantly, the actionable insights that help the market participants understand these evolving risks and opportunities in these sectors are very, very important to us. That brings me to the third pillar, market engagement. As you know, Daniel, we take great pride in the engagement that we have with a broad spectrum of market participants. Just this past June, Moody's and ICRA hosted our flagship annual joint credit conference, which was yet another resounding success in spite of the monsoon rains that came. The event covered topics such as sustainable finance, infrastructure financing, and corporate resilience amid global uncertainty. And that event alone welcomed senior representatives from over 100 institutions. Again, another prime example of how we bring meaningful insights to the market, again, from different perspectives, and we help market participants navigate that complexity and stay ahead.
Thank you, Wendy. Of course, when we think about India, we're also, Wendy, very excited about some of the noise around the development of the GIFT City, right? And we've heard different perspectives, how that is developing and how it might impact, the financial markets for India overall. And when you think about the GIFT City influencing around India's bond market, what role do you see it playing? In particular, as Wendy was touching on a lot of the transition and sustainability goals, India's green financing and ESG investment goals.
So just talking about GIFT City specifically, these regulations actually came into effect in 2019, and the aim was to make this an international, financial center supported by friendly regulatory framework and tax concessions. So while presently bulk of this activity is largely confined to foreign currency borrowing, currently the book is about $70 billion, roughly, of which about $15 billion is actually green bonds. And we have about 40 odd issuers, at the present time. There is increasing interest, though, in using this hub, going forward for long-dated, borrowings to support large infrastructure projects, aircraft financing, and sustainable financing. I would say the landscape is still, evolving, and I think, over time, we will see heightened level of activity here. But at the present time, the scale is still small.
Understood. Of course, India has reached some interesting, significant milestones as well in terms of technology, innovation, and I guess decarbonization journey, right? Which you, Ram, kind of alluded to as issuers come to the market for those types of green or sustainability type issuances. For Moody's and ICRA, Wendy and Ram, what does that mean, and where are you doubling down in terms of capabilities, and also understanding how that might evolve over time?
Moody's has always been focused on innovation and the use of technology, both in assessing how technology impacts our rated issuers, and also in exploring how emerging technologies can enhance our offerings. We are particularly excited about Gen AI's potential, and we've been deploying it across the firm. The research assistant tool, which one can find on Moody's.com, is a prime example of that. What we've done is basically combine Gen AI with Moody's vast data estate, and it has become an invaluable tool for many of our users to work with our research and insights more effectively. And also, perhaps just to throw in an example of a productivity tool that we've developed within Moody's, the streamlining of debt documentation analysis. I'm sure you can imagine takes up a substantial amount of time by our analytical teams. Whilst there is certainly an aspect of experience and human overlay or human insight, we're building solutions that help our analysts quickly identify credit-relevant information such that it helps to save time and enhance their position. Another area that we are doubling down on is India's renewable sector, along with its infrastructure investments required for energy transition. Growth in India's renewable energy sector, Daniel, as you're very well aware, has been extremely impressive. And we expect this strong momentum to continue with around 300 billion in investment required over the next decade. And achieving this, we believe, will require a multi-pronged funding approach that includes about 35 billion in cross-border issuance. So our positioning in India's renewable energy space, I think is quite a neat success story, and I think will continue to pay dividends. What we've done here in this sector really is a classic case where Moody's got in early. We have proactively engaged with policymakers, potential issuers, and intermediaries through foundational research and outreach for a number of years. And this proactive approach has really helped us to build market understanding of our analytical approach in this unique sector well before meaningful issuance came to fruition. So maybe just to round things out, I'll say that another area that we've been very much focused on for the past 5 to 10 years, and that's in transition finance, right? Moody's is the leading second-party opinion provider in APAC. Since late 2022, we've issued over 250 SPOs across more than 40 countries, including for Greenko, which is a major player in India's renewable energy sector. We've also introduced net zero assessments to evaluate issuers' net zero plans. And so we're really, really proud of our role in supporting the growth and the innovation of sustainable finance across APAC, which we believe will continue. And I think it positions us well to meet future market needs as India continues on its decarbonization journey.
And Ram, do you want to add anything else on that technology aspect and also all of that decarb journey that we're seeing?
ICRA as a group has been investing in technology quite significantly in the last 5 years. Our IT spends have more than doubled, actually. And these spends are primarily targeted making our infrastructure state-of-the-art, our applications fit for purpose, with a view to getting us the desired efficiencies. So we also have a change delivery and business transformation team. They work very, very closely with our technology team to deliver the outcomes in areas of high priority. So technology is certainly a key area of focus for us. Now, of course, with AI coming in, obviously the bar has to be raised some more, and then there are a lot more moving parts, if you like, that we are dealing with. Now, coming to ESG and the sustainability front, there are two parts to this. One is the landscape itself. I think has been evolving quite a bit. Not too dissimilar to most other countries, I guess, but admittedly, India is probably a little further off in terms of where we are, on this journey. But certainly, the regulators are actually giving a lot more attention to this at the present time. Institutions are expected to make significant disclosures, periodically, in this area as well. So all this is receiving a lot of attention. And there is a clear roadmap that has been articulated, by the government in terms of migration to green energy and changing the composition of our energy mix, et cetera, with a view to making the entire ecosystem a lot more, eco-friendly. But and they have, milestones defined going forward at different intervals, so which is actually quite encouraging. And from a rating agency perspective, we believe that we serve as a critical tool to ensure that ESG labeled instruments are credible, impactful, and are aligned with the global, best practices. We are seeing increasing traction in this space. As I said earlier, this business is infancy as far as ICRA is concerned. It's just about a year since we got into this, and we've already assigned 10 ESG ratings thus far. And we have also recently added second-party opinions to our portfolio, and that happened just about a week or 10 days ago. So I think over the next few years, one will see a heightened level of activity in this space in India.
We're seeing so much development, not just in India's capital markets, but also the evolving trends that's happening across not just the capital market side, but also the technology front, innovation, and of course the decarb journey that all of us are going through as a community. So we want to thank both of you for providing certainty in sometimes a very uncertain environment. I want to thank Wendy Cheong, Regional Head of Asia Pacific at Moody's Ratings, speaking with us today, and also Ramnath Krishnan, Managing Director and Group CEO of ICRA Group. Thank you very much both for joining us on this important The Asset Talk. We appreciate your time.
Thank you.
Oh, my pleasure.